Hi there, welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today I'm lucky enough to have Arthur Halleran, CEO and Director of Trillion Energy. Trillion trades on the CSE with the ticker TCF. Very fitting ticker. Hey, Arthur, how you doing today?
I'm doing very well, thank you.
Hey, thanks very much for staying up late for us here. I know you're in a bit of a different time zone. Looks like you got really exciting sort of stories sort of unfolding, and a few smart, savvy sort of energy investors wanted me to get a hold of you and see if we could get an episode done. So thanks very much for accepting the invite. Before we really unpack your background and all that, let's get our 60-second pitch out of the way.
Okay, sounds good.
First question. What is the name and stock ticker of your company?
So it's Trillion Energy International, and we trade in the CSE under TCF, the OTC on TRLEF, and the Frankfurt Z62.
What is your market cap?
It's about 20 million Canadian.
What is the vision for the company?
To be a substantial oil and gas producer in Turkey and in that area.
Why are you best to lead this company?
I'm best because we actually use new technology to drill these wells. And with new technology, there's always hiccups and so on. And I have 44 years experience. I have a very thick skin, and I have a really, pretty tight sense of persistence. And that's what you need to have to get this done, where other people might have packed it in.
How many shares are outstanding?
About 157 million shares.
What is the insider ownership and how much capital have you invested?
Yeah, so the insider ownership would be probably about 10%, and I probably have in rolling in wages or invoices and so on, probably upwards of about 3 million Canadian dollars, and even in 2024 here so far, I probably put in about 742,000.
Are you fully funded for 2024?
We're fully funded for the SASB, which is our gas project, and this one is going to generate revenue. The oil play that we have, the exploration, we'll probably have to look for additional funding through a debt or a royalty or something in that line.
What are your short-term catalysts?
Short-term catalysts are we're perforating 4 of the wells right now, so that will be news released here. Some will be tomorrow and in the next few days, and also there's an additional 3 or 4 wells we're going to re-enter, and that's for SCSB, and then the other catalyst will be new drills, new wells in that oil exploration project.
Well, thanks very much for that. Now, Arthur, for those of my viewers that don't know who you are, could you share a little bit about your background?
Yeah, I am a geologist. I have 44 years of experience in the oil and gas industry. I worked my way up from the majors like Husky, Petro-Canada, Chevron. Then I went to work for the juniors. And then, of course, you branch out and you start forming your own companies. And probably about half of my career is international. So I've probably worked in about over 30 different countries. I actually have a PhD in geology in the petroleum industry type discipline. I've been co-founders of Canacol Energy, which I co-founded in about 2007, 2008 with 3 other Colombians, and it's now the largest gas producer in Colombia. And also I was kind of a part of the founders of Raleigh Energy from Egypt, and then with United Hydrocarbon in Chad, and also did some work with Brad Griffiths for Griffiths Energy. So I have a lot of experience in the oil and gas industry.
Excellent. Thanks very much for sort of sharing that. How did you sort of get involved in petroleum? How did you know that's where you wanted to sort of get your education, and what was the initial sort of allure of the industry?
Yeah, actually, My father was a prospector, and we lived in northern BC, and I mean way northern BC, and we used to do a lot of prospecting, and I actually liked rocks. And then when I went to university, I was going to be a biologist, and in first year science, they were talking about geology, and that's the first I knew you could get a degree in geology, and from then on, I was hooked.
So just speaking to Canacol, in terms of maybe you're being a little modest, but you're part of the founding group on that, and maybe you could just talk a little bit about the gas discovery that was made and what that sort of turned into.
Yeah, so Canacol was again, like, I was one of the co-founders. There was three of us, and actually Canacol, we came up with the name. It means Canada and Colombia, so you have Canacol. And I was involved in the initial part of it, Rancho Hermoso, which was an oil field, and it was up for sale. They had a good set of seismic, but they did not actually really use the seismic to develop the field. And it was a pretty tough going, but then I went to Canada and went to some investors, and they decided they're going to invest some money because my Canacol was Canacol Panama. So then we formed Canacol Canada. They wanted Charlie Gamba to be the president, and then we went and merged with Brazelta, which was from Brazil, so we could be a trading company. And I was involved more in like the Ombu, some of the gas work, some of the early land sales, and so on. And then after that, I went on my own again for some other projects, and I took my equity interest. So the gas part of it was part of the land we picked up and so on, and the initial work, but I wasn't actually there for a lot of the nitty gritty.
Right, that company still trades today. It looks like shortly after you guys put your idea together, a few short years later, it was highly successful in terms of stock price sort of appreciation. So congrats on that. Now, if we turn our attention to why we're talking today, Trillion, if I look back, that it was a real high flyer a couple of years ago, back in 2022. A lot of volume sort of came into the story, and you had a big price appreciation. The stock sort of doubled or tripled, went up to about 250 a share based upon sort of your equivalency today. And then last year, there's a bit of a sell-off. Could you sort of discuss a little bit about why the sell-off, and then what 2024 sort of represents in terms of a potential rebuild?
Yeah, so two things actually occurred within the company at that time. So when we were drilling the wells, so we had 6 wells that we drilled and so on. We had a lot of good news releases, and we had good tests, like 5 million, 6 million, 4 million cubic feet per day. And the wells produced a lot of gas. But these, like I mentioned earlier, these are very technically challenging wells. They're long reach, directionally drilled wells in a very thin, like not a thick stratigraphic interval. And the reason why they weren't done before was because the technology wasn't there. So they drilled ones that were shorter in 2007, 2011. And then so we reached out and we tagged these pools that were discovered. We put them on production right away because they were tied into the facility that existed. And we used 4.5-inch tubing. And so the issue that happened was these wells produce a little bit of water. They're a conventional gas reserve. They produce a little bit of water, but with 4.5-inch tubing, the wells quit producing at 2 to 2.5 million cubic feet per day because there wasn't enough volume and pressure to push the water out 4.5-inch tubing. So it took us a while to solve that. And so we realized the difference between the wells we do now and the wells that were done before is ours are longer reach. So we have a longer section of water filling up the pipe, but they use 2 3/8-inch tubing. We use 4.5-inch tubing. And so the production slowed down, and the volume was not very large. And in the process, we looked at water pumps and changing the tubing size. And a long story to make it short, There wasn't a news release out, and people say there's no more reserves there, and they lost interest, and they started panicking, and they sold, which now people will find out is not correct, because we are bringing these wells back on because now we know how to solve the problem. But at the same time, in October last year, when we had the big crash, there was one capital firm, Trainer Ridge, that used other brokerage firms to buy shares on the open market, and they ended up buying a lot of shares. They couldn't pay for them, and then the main principal of Trainer Ridge died, and so the brokerage firms, to recoup some of their risk money that they have, they just dumped the shares. So like millions sold within a day, like 18 million, and it just knocked the price right down, and we have not really recovered.
So you're probably going to get into it in a little bit here in terms of like how you're sort of using technology to sort of deal with the water problem. I was reading a little bit about it in preparation for the interview, but I'll let you, an expert, explain a little bit. But I'm excited to sort of dig in. So 2024, your chart's certainly less chaotic. Certainly looks like you've been building a sort of a good base. And you recently just closed on a financing, which we'll get into as well. And it looks like it was well supported. So good stuff. But why don't we sort of dig in on I guess your three sort of projects? You've got one offshore gas and then sort of two onshore sort of oil plays within and around Turkey. So maybe you could talk about this SASB sort of gas field in the Black Sea in Turkey, and yeah, can you sort of chat it, give us a bit of an overview on that?
Yeah, I sure can. So SASB, in 2017, we purchased a company in Turkey for the Cendere Oil Field, because SASB, even though it has $600 million worth of assets, so it has a facility, and it's all really good shape, 4 platforms, gathering system, and it also had 8 gas pools. 4 of them were on production, and 4 of them were not on production, but they were discovered. And the reason why they weren't on production was because they were happy to drill out 1.7 kilometers from the platforms, but any further they felt not comfortable. This is 2007, 2011. Whereas the technology has changed, like there's some in the North Sea and so on. So we actually, from the platforms, so that there's no expensive subsea tie-ins or any of that, and we get production right away. We drill the wells, we perforate them, the gas goes up the borehole into the gathering system, into the onshore facility, and the reservoir is conventional. And so SASB was basically converting proven non-producing to proven producing reserves. And so we've done that to the 4. And the technology was, if you can envision, you go down and then it's like a heel, and then you drill. It's not horizontally, it's at a slight inclination, and then you go down and you try to hit the pay vertically. And so some of our wells are like 2.8 kilometers long, and we go in there, and when you look at that technology, the technology has everything from friction, because it's a long ways to go for the pipe to be in the bottom. So they looked at mud, and then we had to use borehole tractors to pull the perforation tools and so on, because you can't use gravity. But that all being said, that allowed us to access these pools. There is a lot more reserves in other places in the SASB that we will continually bring on production. But in the technology, so it worked. We found this gas, so we initially went from about 10 BCF proven reserves, our percentage, to about 55, which is after the royalty and so on. So 55 BCF from this last amount of drilling. but there's always little technical hiccups. So we use 4.5-inch tubing so we could run the tractors in. And like I mentioned earlier, the 4.5-inch tubing, it's like if you want to suck water in a paper towel tube versus a soda straw. Same
Right.
idea with the production tubing, right? And
Right.
so it's not really, we thought initially it was going to be really complicated. So we had studies about water pumps and artificial lift. And it turns out that that is way down in the future, because right now we don't produce enough water for a water pump, and all we need to do is change a tubing size. They call it a velocity string. It's just changing the tubing size. So what we're doing right now, because we're going to not be able to go down that 4.5-inch tubing, we're going in with the perf guns. We're perforating all the pay, and once that's done, we've already done 2 in the tripods have already been done. We've done 2 more now on the platform. We've got 2 more left. And then we're going to produce them for a while because we're going to get a flush production and then just change the tubing size. We'll then have a constant, more stable production. And it's about 2 to 2.5 million cubic feet per well. And we'll have more stable production for probably 3 or 4 years, maybe a little longer. Then we can look at putting in ESPs or PCP pumps to handle the water. And so that's SASB. We've also redone the seismic, and we have really good quality 3D seismic. And there is a whole series of other gas pools that were not drilled, and so they're exploration, but they have a very low risk, that are still structurally oriented. Still structural targets. But then there's another whole layer of stratigraphic exploration that we can see. So we're looking at this SASB as way more gas than we anticipated. Then for Cendere, our little oil field that we actually bought. So we bought all of this for about 2.2 and another small interest for altogether $2.7 million. Cendere was worth about $3-4 million. That's the oil field onshore, because the gas field at the time was producing gas below the economic value. There was no reserve report, so there was no reserves. So they wrote off the facility and gave it a zero value. And so Cendere is a long-term, low-decline oil field. It produces about 90% water, even more. So it's just a water cycling, and it's averaged probably about 100 barrels of oil per day. For us, we own about 19% since we bought it, since about 2017. So we produce, about 40,000 barrels of oil per year, which gives us about 150,000, 200,000 US cash a month. But every year when we get the reserve report, they make technical revisions, and then we end up with the same reserves at the end of the year as we had at the beginning of the year. So those are the 2 producing fields that we have. And then we have a exploration block that we're working on right now, and that is it has the potential of being 100 million, 300 million barrel fields, because it is in the southeastern part of Turkey, which has it's part of the Zagros Basin, which comes up from Iraq, and it has the same source rocks, reservoirs, same size pools, because just recently, a couple of years ago, and then last year, 2 big pools were found by TPAO, the Turkish Petroleum company, the government one. One is about 1 billion barrels, and the other one is about 300 million barrels. And they're actually, last time we checked, they're producing about 37,000 barrels of oil per day, very light. And they're trucking it to the facility. And the facility is about 130 kilometers away. These fields are about 4 to 10 kilometers from our these exploration blocks.
So just before we kind of skip along too much, could you just talk about sort of like your working interest and sort of your net on on SASB?
Yeah.
on your offshore gas. Could you just explain sort of the ownership structure and what working interest you have?
So SASB, we have 49%, and our partner is 51%, and is TPAO, the Turkish Petroleum Oil Company. And the thing about SASB is that we actually get about $10 US per MCF, and it's because we sell gas to electrical generators, which is the highest price purchaser of our gas. And the thing about Turkey is Turkey imports now about 98% of its gas, and the gas is its energy of choice, and its distribution lines keep increasing every year. So every bit of gas that we produce domestically, we have a buyer for it. So that's a really good part of it. And then for like the net back OPEX for the SASB gas, we pay a set price of about 90,000 US a month. So we actually probably net back in the order of $8.5 an MCF. The biggest cost is our royalty, which is 12.5%.
Great, thanks for clarifying that. And then you talked a little bit about Cendere. Could you just sort of cover off kind of the working interest, netbacks, and things like that?
So again, with Cendere, we have about 19.5% interest on pretty well all the wells, except for two of them, which is about 8.5%. And again, the partner is TPAO, the Turkish Petroleum Oil Company. The op costs in the oil field a little higher, but our net back, so we get about Brent. So when we get, say, $70, all our costs included are probably about $30 a barrel. So we net back about 40.
Excellent. And then this Gabar oil, the Southeast Turkey, what's the ownership structure sort of that? And again, are you partnered with the Turkish sort of petroleum energy company on that?
No, we're actually, so it will be 50-50. We have to earn our 50% by doing seismic. So we have already shot 150 kilometers of seismic. We have about another 200 and something kilometers to shoot, and we have 4 wells to drill to earn. And the partner is a industrial partner, so it's not TPAO.
Okay. And this is in sort of the land of the giants here. There's been some recent sort of like pretty significant light oil discoveries. I think you touched on some of them, but
Yeah,
could you just reiterate that again?
yeah. So these fields are, like, again, about 10 to 5 kilometers away from our boundary, and some recent discoveries, which could be extensions of these found pools, or they could be new pools. And the wells, they average probably about 1,000 to 1,200 barrels of oil per day, and the oil is in the order of 36 to 40 API. And these structures that they drill actually run onto our property. We have the seismic, but it's the brute stack, so it's not processed yet. But the structures are so large that you can even see them in the brute stack. So we already have locations defined to drill, but we just have some fine tuning to do.
Right.
So you are right; it is the land of the giants, because you're talking very large anticlinal structures, and we're looking for a saddle in the structures, and that's where you'll find the 500 to 300 million barrel fields. There's also another target type, which is a big fault, and if you need throws of a couple of 100 meters, and because it's stacked carbonates and shales, they go up against each other, and you'll find in that fields probably 100 to 200 million barrel fields. And the third type are smaller faults and porosity changes and so on, and that's in the order of 20 to 50 million barrel fields.
Excellent. And so you've shot about half the seismic, or two-thirds the seismic that you have to for that, and then you've got a 4 well commitment. Is that correct? In order to earn in your interest?
That's correct. And when you look at drilling wells in SASB, we were in the order of 12 to 13 million dollars per well. In Gabar area is about $3 to $3.5 million. So it's substantially cheaper, and the depths are about 2,400 meters. So you're looking at about 30 to 35 days to drill it, and we have to drill 4 of them.
And so you cover 100% of the cost of those in order to earn your working interest. So you're 50-50.
That's correct. Yeah.
Excellent. Well, thanks very much for giving us an overview. Sounds like we wish good luck here on the perforation and some of this new sort of like piping structure for your SASB. Sounds like you're going to have some imminent sort of news out fairly soon. That should be an interesting catalyst for shareholders of the company. Why don't we sort of turn our attention to some of the financial side of it? So when I was kind of like preparing for this, I was reading through some of your past financials, and it seems that production revenue is down fairly significantly, even from sort of last year's pace.
Yep.
I think you described a bit about why that is, and that's because of the way that you chose to sort of drill and complete these offshore sort of gas wells. Can you sort of explain a little bit more about that, and then what your sort of I guess, is there any sort of guidance that you're allowed to provide or a target that you're looking for in terms of exiting 2024?
Yeah, I sure will. So what we did in the wells is, like I said, we have too large of a tubing. It's 4.5-inch tubing, and there's no real mystery. We just got to put 2 3/8-inch tubing. We've got a lot of studies that show that, with the pressure of the gas, it will go in at high enough velocity, it'll just shoot all the water out. And the wells only produce about 2, 3, some maybe 10 barrels of water per day. But when it's 4.5-inch, what happens is the gas can go through the side, and the water just ends up building up until finally the weight of the water is too much, and it's sitting on the perfs, and it basically equals the pressure of the gas. And so all we're really doing is perforating the gas wells and put them on production, right? And so the reserve report we got done for this year was done by a third party. They believe that. So what happened is that, part of the conversation was people or investors are saying the gas is gone now and we will never get it back. And the fact is the gas is still there. We just need to lift the water off the perf zones. And how we're doing that is we're perforating other gas zones, and that's new pressure and is pushing up. And all that will happen is that it will end up, taking the water off, and then the zones that had the water on will start to add more gas. And so over a period of time, like maybe 4 or 5 days, we'll start to get production. I truly believe, and I would say we already have evidence, that we will get the wells will come back at about 2 million to 2.5 million cubic feet per day. So if we just use an easy number, say 2 million, and we get half of that's ours. So every million cubic feet per day equals, at $10 an MCF, gives us $300,000 US a month. So that is basically $3.6 million a year, right? So we expect from these 6 wells that we're going to be bringing back on production, we say, okay, you get about 2 million. So that's 6 million cubic feet per day, and we have a few more other wells that we're going to re-enter. So we expect to exit in the order our interest, say, of about 7.5 to 10 million cubic feet per day. So that'll give us an exit of about 25 million US to 36 million US a year exit rate, right? And that's pretty good, and it's very, very easy because we haven't lost the gas. The wells stopped producing at 2 to 2.5 million cubic feet per day. We looked at the legacy wells, and they end up producing like that for about 3-4 years. Then they start going into a steep decline. That's what we expect we're going to get back. We have 6 wells that we've already drilled. All we have to do is very inexpensively bring them back on, which we're doing. And then we also intend to re-enter. There's 5 more wells in the future, and 3 of them we feel we can re-enter and not reperf, but either put in velocity strings or artificial lift, and that'll end the year. So we expect to exit between 25 million to 36 million US a year.
Excellent. Thank you very much for that. It's a good breakdown. Can you provide a bit of a breakdown on the cap table? How many shares are outstanding? Options, warrants, any debt?
Yeah, so we have, just with the last equity raise we've done now, we have about 157 million shares outstanding. We have about 48 million warrants, but 15 million of those warrants are way out of the money. So there's only about 33 million warrants, and a lot of those came from this last raise. And then for options, we have about a million options outstanding. Sorry, and for debt, we have a 15 million Canadian debenture, right? That's due April next year.
And what's the conversion on that?
So it's the interest is about 12.5%, but the conversion is basically like $2.50 because it got caught in the 5-to-1 rollback, right?
Okay.
Yeah, so it's way out of the money.
Right. So there'll have to be something sort of sorted out with that. Otherwise, that could be fairly expensive to pay back. I guess you're anticipating some pretty significant cash flow as well to sort of come on. Can you provide maybe you could just give us, so you closed on a private placement, how much did you close on and what were the terms?
Yeah, so we closed on about, I think the last number was about 2.7 million Canadian. It was, one unit was a 9-cent share and an 18-cent warrant that had a strike price. That had an acceleration price of 35 cents, and it's good for 2 years.
Great. And how do you plan on sort of sustaining your capital needs going forward? How will you mentioned earlier, you've got some, wells to drill sort of on this much less expensive, but still, does sort of add up here.
Yeah, that's correct.
For this Gabar, Southeast Turkey, new exploration target. What are your sort of plans in terms of sustaining your ongoing capital needs?
Yeah, so the first focus is to start getting some really good revenue from SASB, and like I said, we could be upwards of 2 to 3 million US per month, and that will provide some cash flow. But the other part of it is we would, for the oil block, we were looking at trying to bring in a partner for that part, and if the final part would be, try to find a like another debt instrument or something in that range.
Okay. And so let's sort of like wrap up here, Arthur. Really appreciate your time. It's an interesting story. I love that you got sort of 3 different plays of varying risk. Really interesting in terms of your onshore oil play. Sounds like just a high risk, high reward type scenario, one that you guys will really have to sort of take. And wish you good luck on sort of securing some funding and things like that. For that. But why don't we review some of the catalysts that you've sort of got going on that investors could expect over the next 6 months? Could you just sort of go through them sequentially? What sort of catalysts we could expect?
Yeah, I sure will. So within the next day and week, there will be the news and so on for our perforation that we've just done on the 4 wells, and then probably in August, September, we will have all the tubing changed. And for the perforations, I always say that's a short-term solution because we're going to get some really flush production. And what that will show everybody, though, is that the gas is not gone. It's still there. the water is a solvable issue. And then with the velocity strings, when we put that in, which is just a tubing change, they'll see that the production will be nice and steady. And so that will illustrate to everybody we should recapture our, at least our old price of, $1.50, $2 on SASB. And so that's that catalyst for that. And the other catalyst, of course, would be an oil well or two in the Gabar area.
Excellent. I'd be remiss to sort of ask what sort of IR marketing is the company sort of planning, or what have you got signed up and disclosed?
So we have Brian Park is looking after the IR, and he's done this before, and he's doing a good job. So we have a couple of interview platforms. We go and we do some interviews on it. We also will be putting out some articles, and also very importantly, like right after this this interview, I actually will be giving a presentation to some investors to convince them to purchase on the open market, to try to get some appetite like that. And then we'll be doing some road shows, but some of these platforms are going to access eyes that have not seen the story before. So it's now, we were kind of slow in the past there because we were not really having anything to release and talk about. But now we're going to, we're doing the perforations, we're going to be doing the tubing change, and then we're going to re-enter these new wells, and we're doing some drilling. So now we have something to actually get out there and talk about. So I think that the IR now will be substantial and quite good.
Excellent. Well, it seems like a long time ago now, but years ago I worked on right at the beginning formation of a company called Realm Energy, and got to spend some time with Jay Park. So I know the Parks. I don't know Brian yet, but if he's anything like his father, then
he is.
Definitely got a good. You've definitely got a good oil man there, and a hard worker. So, anyways, it was about 18 months from formation to an exit on Realm, and did very well for a lot of the network. Pretty interesting, fun, exciting time. So, what on that note, what makes Trillion Energy a compelling choice for investors right now?
Well, right now it's because the shares are so cheap. The company is extremely undervalued. They just got to go look at what our value was before, and the asset still exists. It's still there. And the other important thing is that we are in a high price environment. What I mean by that is our product gets good price because we are looking and producing gas in a country that needs it. They import 98% of it. So it's a really good low risk opportunity.
Any final thoughts or messages you'd like to leave us with?
Yeah, I think one of the things I like to always stress is that there's a conversation that oil and gas is on the way out, but oil and gas is not on the way out. It's going to be here with us for a long time, within my lifetime, because in this last year or so, it was made very clear that green energy is important, but we need the dollars and so on in oil and gas to keep the conveyor belt going to get this going.
Yeah, we need, you're not going to sort of hear too much of that talk from me. I believe that, there's definitely a place for it. We can't, a lot of these transitions, they take a long time. It's not something you're just going to snap your fingers and, 5 or 10 years out, it's going to suddenly completely sort of flip over. So, anyways, we continue to need conventional forms of sort of energy, and good on you for continuing in sort of harder regulatory sort of environments. But I appreciate you spending some time with us here. So this is like a first look at Trillion. We look forward to catching up with you here on sort of a quarterly basis, and sort of getting some updates for our audience. Our audience is primarily, Canadian listed small cap stock, investors that are looking for capital gain opportunities by being able to get involved early. So I appreciate your time, Arthur. Thanks very much, and we wish you some good luck here on the next couple of news releases on your SASB field.
Okay, well, thanks for letting me tell my story.
Thanks, Arthur. Have a great day.